In 1869, Thomas Edison developed what they called the universal stock ticker. It incorporated alphanumerical characters. It transmitted stock prices in what was considered then real time. Changes in prices, there was actually a tape that would come out of it, right? So changes in prices would be on this tape, and all of the major players, they had them in their offices or, those old country clubs or whatever, where old guys smoking cigars. But it gave them an edge on all other investors. Now, I suspect it was during this time that the phrase, "don't fight the tape," first appeared. This is a mantra, by the way, that has stood the test of time and ranks right up there with buy low, sell high as key Wall Street axioms. Yet these days, I got to tell you, the smartest folks are fighting the tape or at least ignoring the tape, sort of waiting for the tape to get it right. But the tape is a tape, folks, and for that split second that you see what you see, it's showing you a moment of truth. Of course, predicting turns ahead of the tape before they show up on the tape is where you can make a lot of money. It can be very profitable, but in the long run, you better respect the tape, which is something my next guest does. Joining me now, the Kobeissi letter editor-in-chief, Adam Kobeissi. Adam, you were a little bit too young for this. Actually, so am I, okay? But we all know about the old ticker. You say that the market has had every reason to go down, and because it hasn't, it's made you more bullish.
Right. I mean, we've been bullish for the majority of this year. Last time we were calling for the S&P to 4,200. Now we're looking even above 4,300 to 4,350. And I mean, yeah, I've tweeted this a million times. We've had every reason to fall. You've had the regional bank crisis. You've had the debt ceiling. You've had Fed raising rates, recession. You name it, we have it, and we're approaching new bull market territory right now. So we're not fighting the trend, and it's been very lucrative.
Why do you think it hasn't, though? First of all, you have almost every day an army of brilliant folks descend on financial media, and they say, you know what, sell your mega cap stocks and buy something that ain't moving, right?
Yeah.
Why hasn't it followed the script?
I mean, I think, you were just talking about something that we've commented on a lot, the S&P 493 versus the big seven. I think this AI trend has provided just a solid base to the market. I mean, you see these seven stocks up 50+%. And then on top of that, anything else, you just need some capital rotation. You see money coming back from the sidelines. You see headlines are, they're negative, but then you see the headlines leave, and then people say, oh, maybe I should get in. There's a lot of FOMO. And I think it's all kind of culminating to this strong wave higher in price action.
Friday, when that jobs number came out, if you were a bear and you saw the market go up on that number, at some point you got to say, okay, maybe I'm wrong. You also talk about the fact that we made a series of higher lows, right? So you like that. We're also breaking a big breakout. So just looking at this, you can see the momentum is to the upside.
Absolutely. And the 4,200 level that you and I have talked about for months on this show finally broke. And you saw that we're already up almost 100 points since then. We're forming higher highs, higher lows. I mean, it's a textbook uptrend here. And until that breaks, there's no reason to fight it. I mean, the trend is your friend, like you said, and you don't want to go against it in a market like this.
All right, I love when you bring the things that you're looking at on the bullish side, S&P 500. Did you say what's your target?
Yeah,
now?
We're looking towards 4350 now. Yep.
4350. If you get there, I mean, I'm looking for give me a 46, give me a 5,000. Not yet.
Not yet. The Fed is still, we still have a lot of ambiguity with what's going to happen in the next meeting. And it's not like we're entirely in the clear here, but we are 12% away from an all-time high.
Crude oil down here, it has to look attractive to everyone.
It is. And the OPEC news, this is the second time that Saudi Arabia has made voluntary cuts that kind of surprised the market. They told short sellers, watch out. And it has to do a lot, we think, and I've published some research on this, with the strategic petroleum reserve that we're trying to refill. Every time the crude gets into the $67 to $70 range, some news comes out from OPEC, and we're back to 75 plus. We think, and the consumer is also very, very resilient. So we think it's a perfect situation. Just keep crude oil prices towards 80.
Bonds, you still like
bonds? We still like them. We still think.
So you're seeing yields coming down.
And we still think the Fed will pivot. Whether they raise or not, this meeting is a little bit unclear. But one more rate hike is the most we'll see, and we will start to see rate cuts later this year. We think.
All right, now gold. I mean, it keeps getting
Yeah, it's a tough one. It's a dollar story, right? And the dollar was in a lot of volatility with the regional bank crisis.
But the dollar held, though, like at that 102 level.
It did hold.
If it breaks under there, will that really be the spark?
And what we've been calling for is if we can get the DXY, the U.S. dollar index below 100, then we think gold's going to rip to 2,100 plus. I mean, we're just seeing some technical support in the dollar, and once that breaks, it's looking very good.
Sounds good. All right.